Hello traders, Gary Wagner here. Just about 11:25 in Honolulu, 4:25 in New York. It is Monday, January 30th, 2017, and this is the Daily Report for Gold and Silver. Following a immigration change by President Donald Trump on Friday of last week, we have seen ripple effects and repercussions really move through the financial markets as a whole. Safe haven assets such as gold have reacted favorably, and U.S. equities have sold off fairly dramatically. We'll talk about that in detail throughout our show. First to gold. Gold is closing up about $6 on the day, $5.80. This is when we look at the Feb contract, which of course is set up for expiration. 1194.20, that is the settlement price, up about 0.5% on the day, a net change of 580. The low on the day has been 87 and the high 98.50. Of course, April gold, which would be where we actually initiate a position in at 1197.10, up about $6 on the day. Now, we did have a mixed bag today with gold trading higher on the day and silver trading fractionally lower. I draw your attention to March silver at 1712, putting it off about 2 cents on the day. So as I said, fractional changes, but those changes were to the downside. When we look at the low, 1708, and the high, 1729, what we can see is a reduction in range in silver trading today. Very, very interesting fact. We want to look at whether or not gold is finding support in this area, and we'll do that as we pull up our first chart. So traders, considering the week that was last week and what we saw gold pricing do, in which we really witnessed the first dramatic sell-off this year in gold, considering that the bottom occurred basically on December 15th. That is this area right in here when the market came down and tested 1123. Still a red candle, still defined in this downtrend that had been apparent and present in the market since the presidential election held November the 8th. And you can see that with this week in which we had this dramatic range of 1340 on the upside and 1220 on the downside, $120 range within that week. The following week, of course, was that doji-like candle, and of course, that doji-like candle really created the beginning of a three-river morning star, and that was a pattern that we identified on our weekly chart, and that would be these three weekly candlesticks here. We did get confirmation the following week. We did take a trade in the market at around 1180. So we did enter the market a little bit late and we pulled profits, of course, last week. The question is, now that we've seen this market really have a dramatic sell-off, and then, of course, the fact that we're looking at a moving target, meaning an executive order on immigration, which was put out on Friday, banning entry from 7 various countries, really set ripple effects in the financial community, as I said, not only in the equities markets, but in gold. And so we've seen gold, although trading off of its high, dramatically trade higher today, closing up about $6. And the fact of the matter is that this new information, I should say, this change in fundamental policy could dramatically affect where we see gold go from here. And so we've got to look at this, of course, on a technical basis and determine whether or not this is an area that is a logical point to look for some kind of support in the market. And so traders, to do that, I have brought up a daily chart, standard candlestick format, but it does contain a fib retracement, which amounts to the most recent rally in the market that we just talked about, in which the market went from about 1123 up to about 1220, so about $100 move. And from there, the subsequent sell-off that occurred last week, and that culminated, of course, on Friday with this doji candle. And of course, traders who've been with me for a while, or anyone studying candlesticks, realizes that this doji can on many occasions signal dramatic pivot points in the market. They reveal a market that is truly defined in a state of flux, so to speak, in a consolidation area in which neither the bullish faction nor the bearish faction have absolute power to move the market. Now, another thing that you want to look at when you do have this candlestick unfold, the doji, is the difference between the low of the day and the high of the day, because the wider or greater the range that's found during that trading cycle, what that really tells us is that there was a great battle going on between the bullish factions and the bearish factions, and the net outcome, of course, was that neither of them could ultimately dominate or take control in the market. Now, today's move, although it is a mild move in terms of candle size, you do get a green candle. That green candle shows that the market was up about $6, but the one thing that we are seeing is somewhat of a variation of a three-river morning star, meaning the first definition is after a defined downtrend, and to a degree we can say that, although it's only been about 4 days, you get this large red candle, you get the star gapped in the center, and you should get a large green candle. We're certainly not getting that. So I would certainly want to have some follow-through occur in the market. I would look for the marketplace on tomorrow's trading. If in fact what we witness is a market that has a higher high and a higher low than the previous day, it would amount to a green candle that would look something like this. And of course, if it traded above certain key areas, and the area that I'm looking at is roughly 1194, which is where it closed at, I believe that we could have a pretty decent buy signal. The second factor that I believe is important is the fact that the lows achieved last week came below the 38% retracement, and at the same time the market closed well above that particular price point. That was supportive of gold, and the fact that we saw this kind of recovery followed by today's action, if we get a follow-through tomorrow, that could signal a pivot or key reversal in gold. So traders, as far as silver goes, if we see the follow-through in gold, I'm not at this point looking to issue a buy signal in silver. Silver's almost acted the opposite of gold, in which you can see Friday's action was this tremendous engulfing bullish line that as compared to that doji that appeared at the bottom of the range. And then whereas we saw a modest increase in gold prices today, we saw a modest decline in silver prices. Now, I would imagine that silver is reacting from its industrial component in terms of the metal itself, and what that tells us is that further weakness in the equities markets could bring about a downside pressure in silver. In other markets that we follow, of course, the big news was a dramatic sell-off in U.S. equities markets, with the Dow Jones Industrial Average closing off about 0.6% at 19,971. Now, it had recouped much of its earlier losses on the day as it traded to a low of 19,870. The high on the day was 20,028, which really occurred at the opening range of trading today. When we look at the Standard & Poor's, that also sold off fairly dramatically, losing 0.6% off the record highs again at 2280. And NASDAQ, which had been such a large gainer over the last week, actually came down about 0.75% to close at 5124 off 38 points. And that, of course, is the NASDAQ 100 E-mini. Interesting, because we really want to follow the dollar. Dollar was fractionally unchanged again, off about 0.1%, and now trading well above 100 at 142. So all things being equal, for the first time since this market has had the dramatic rise above 20,000, which of course occurred last week, we can see this ceiling as we go through the end of December and the beginning of January. Of course, that was following election results. And if we go back to November the 8th, which occurs right in here on this daily chart, we had a substantial increase. We had a little bit of sideways trading, another increase, sideways again, and to this final top here, 20,000. It traded sideways for a good couple of weeks before breaking above that with a vengeance as Trump enacted some of his policies and procedures that directly affected a business, whether it be regulations or whether it be infrastructure projects that he brought up. We saw this dramatic rise. And if you recall from Friday's show, I talked about the fact that we have this gap here. And this gap on a technical basis will typically come and be filled. Now, it's been filled in terms of range with the wick on this candle. However, we could easily see some more downside pressure in the market. However, I do not anticipate a dramatic sell-off at this point in U.S. equities. And so traders, after hitting a high of approximately $54 per barrel, fundamental data has really put a bearish slant on the market in terms of the dramatic production here in the United States. When we look at our short-term daily chart, we can see that although the market hit these tops, it has been range-bound with a very, very minor bias to the downside. It did reach the upper ends of this particular channel line, and from there has moved lower over the last couple of days. We had a low hit this midpoint. I believe a break below this particular price point, which comes in at around 52, market closes at 52.67, would, on a technical basis, give further impetus for this market to move as low as $51 per barrel. There is no doubt changes implemented last week by Donald Trump were plentiful. There were many of them, and the ones that related to economic revitalization, for the most part, were taken in by the corporate community as well as traders and investors in a positive light and a positive note. However, once Donald Trump actually addressed the immigration issue and revamped the current policies of the United States, although it's a temporary ban, that really sent ripple effects throughout the financial community as well as the citizens as a whole in the United States. Therefore, we could see a dramatically increased volatility play not only in the hands of U.S. equities, but safe haven assets such as gold, which is why we want to take a serious look at re-entering the market from the long side. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.